Let's get Nigeria's into the mix. The country ended the year 2024 with overall annual gross domestic product growth rate of 3.4%. That was up from 2.74% that was reported in 2023. According to recent data released by the Statistics Office, Nigeria's total productivity value for last year came in at $195 billion. That's a decline of a whopping $168 billion from the full year 2023 GDP value figure of $363 billion US. And there is a lot more to unpack, not just in the latest GDP numbers, but also how to bridge the country's widening output gap. Welcome my guest on this, Tilewa Adebajo, one of Nigeria's foremost economists and investment professional, and the Chief Executive Officer at CFG Advisory. We thank you for making the studio tonight, sir. Thanks for coming.
Good evening.
We appreciate it. I'm not too sure we've had this handshake in the new year. I'm not too sure we had that in January, but it's good to have it now. Break down the latest GDP figures for me.
Well, as you know, Nigeria closed the GDP numbers 168 billion down from 2023. So we lost 168 billion of our GDP between 2023 and 2024. And our GDP currently stands at about 198 billion, which makes us the fourth largest economy in Africa behind South Africa, Egypt, and Algeria. So having said that, I think we can understand that the main reason why this has happened is because of the massive devaluation which took place over the last 2 years and the reform programs which has tried to correct the structural issues with the fuel subsidy and, of course, the multiple layers within the foreign exchange system. So I think that was the reason why we've seen this, and on the fact that the economy is still in stagflation. And as you've said, from the growth numbers from last year, the economy closed down at only 3.4% in terms of GDP growth, which is suboptimal for a country like Nigeria that has a population of 200 million growing at 3% a year. So that's how we've ended the year. But if you drill down a bit, there are a lot of positives that we need to highlight.
Yes, the key elements of the GDP data that you think everyone should focus on. I mean, the sectors that are up, those that are not, so the laggards and so on. Where do you think we're seeing, despite the sharp decline in the headline figure in dollar terms?
Well, I'm going to focus now on some key sectors of the economy, and I think what I've done is to document the areas that have really performed. If you take a look at agriculture, for instance, agriculture in 2023, in terms of nominal GDP growth, grew about 11.12%, but 2024 finished down at 6%. So agriculture was down year on year, 2023-2024. Surprise in the oil and gas sector, which grew by 9.47% in 2023. The oil sector, it's a sign of encouragement, ended up 2024 growing about 30%, which is incredibly impressive, 3 times growth. So it shows clearly that the oil sector is indeed recovering. One of the biggest surprises, which is not metal ores, which grew by about 86%, 2023, sustained that growth, and now this year grew by 134%.
And that's in the mining.
In the metal ores, that's just mining. But unfortunately, manufacturing, which grew by 30% in 2023, only received a 4% growth this year. So that's the 2024 last year. So 4% growth is very disappointing for the manufacturing sector. And I think that is why it's important that government should focus a lot of its policies to be able to restore the manufacturing sector. Industrial policy reforms are very, very important, especially if your manufacturing sector grew at 4%. Construction, which closed at 18% in 2023, only grew by 2.4% in 2024, which is rather surprising, especially with a lot of the capital expenditure budgets. But one of the areas which has rebounded significantly is trade, which grew only about 3% in 2023, but closed 2024 with a 34.25% growth, which is pretty spectacular. So there's a rebound in trade. So we can see that there's some green shoots in that area. Another sector which is quite promising, which suffered from the fuel subsidies removal in terms of the shocks, transportation had a loss of about 30% in 2023. So not only did it for 2023, transportation had a loss of 30%.
Yes.
So not only did it recover the 30% loss, it also in 2024 it grew by 17.9%.
17.
So which is quite spectacular. ICT was disappointing, had a 40% growth in 2023, and now we're seeing just in 2024 a 12% growth. The financial services sector continues its spectacular rise. From 28% in 2023, we've seen a 71% growth in financial services in 2024. And, so these are the sort of things that we're looking at. But another positive development is in the real estate sector. The real estate sector only grew by 2% in 2023, but closed 2024 at 54%. So you can see all the development going on in Lagos, especially around the Ikoyi area. I think this has been reflected in the growth in the real estate sector. So, but I'm surprised that we're not seeing that reflection in the construction industry.
In the construction. But perhaps the construction sector could be explained that folks' pockets are pressured. Folks have to deal with the impact of the subsidy removal, consumer spending. Folks just have to fend for. Then fuel prices go up. So I'm sure there's a whole lot of folks thinking about how much I can spend on construction when I have to find my daily bread and just
exactly.
sustainable.
Those choices.
Yeah, those choices are made. So folks will just say, look, I've just got to put a quote on it because it just got petrol prices at 1,000 naira per litre. They got exchange rate 1,005, 1,008, and 9, heading toward the 2,000, and folks just panic and say, look, whatever we have in this house, it's just going to go for feeding and some transportation, getting some energy costs also. I'm sure we also went through that last year in terms of whether it was petrol prices or even the introduction of Band A and what have you. But when you go back to the GDP figure, and I want you to do that for us, Tilewa, when you say we're looking at about $168 billion haircut in GDP for a country such as Nigeria. Put that for me, what does that really mean?
Well, it means that we've lost 168 billion of our productivity in real terms.
In dollars terms.
Yes, so, and that is really where we have the challenge in Nigeria in terms of productivity. And you can see that by the growth in the manufacturing sector. The manufacturing sector only grew 4% last year.
For the whole year.
For the whole year. So that is pretty disappointing because that's a critical sector of the economy. That is where productivity comes through and employment. So it's important that the government should take a look at this area and see exactly what they're looking to do. But, you know, like we said, there are sectors that are improving, and I think it's important that we build on that, especially the oil and gas, which is growing about 30%. We can see metal ores, the mining sector, growing by a spectacular 134%. So if you take a look at this, you know, it's about policy. So we need to now shift our policy and reset the priorities towards areas that needs that boost to be able to have sustained GDP growth. So we'll look at the
current realities of the economy. Let's chat specifically to what you describe as the output gap in the Nigerian economy and what that means for our per capita income in real terms.
Well, when you have an economy that has a potential of productivity at a particular level, and that economy is not reaching its potential in terms of productivity and output, then there becomes a gap.
So it was a promise, but it's not firing the potential to productivity.
Exactly. So you're short on that productivity, and especially when you now have policies that is, especially with the way you've managed your foreign exchange devaluation, it's cost you 160 billion of your GDP. So you can't be talking about $1 trillion economy when your GDP is down to 198. So in order for you to do that, you need to be able to improve productivity, you need to be able to improve growth and close your output gap. Because if you do not close your output gap and have productivity to your potentials, then you would not reach your growth potential or your what you would call your realized potential in terms of growth and productivity. And of course, you need to be able to create employment for the 200 million population we have.
What are the major drawbacks?
Well, major drawbacks, as you see, like I've said, is industrial policy. You have certain sectors of the economy that is doing well and some of sectors that are not doing well. So you knew that the oil sector was declining at a point in time and had a loss of about 20% growth. But now you've seen that we've had positive policies within the oil and gas industry.
How much productivity can we get out of the oil sector, really?
Well, it's significant because don't forget that apart from the fact that the oil industry is only contributing about 7% of the GDP, it provides a significant amount of foreign exchange for us, which provides stability for the rest of the economy.
Okay.
So what is important is that you need to increase the productivity.
Yes.
Nigeria was producing 2.5 million barrels of oil as far back as 1977. Since 1977, we've not been able to exceed 2.5 million barrels. That's a long time. So what that means is that we're not investing in our oil and gas industry. At the peak, about 4 or 5 years ago, we had $22 billion worth of investment going into the oil and gas industry. That declined to about $3 billion some time ago. But now that you have the new policies that are coming through, government is encouraging divestments of the IOCs to local partners, and they're looking at opening up, and we have a lot of incentives with tax. You are seeing now that those policies have shifted, and the benefits of those policies and signing those documents is now reflecting in a GDP growth of, nominal GDP growth of 30% in the oil and gas industries, which is rebounding. So rig counts in Nigeria are now gradually increasing from a low of 15 to about 20. So if we see that continued trend this year, then we can begin to see our oil production going back to 2 million barrels a day.
And I love that. But when you look at our budget and our fiscal spending, the capital structure, our reserves and other important metrics that we need to have a stronger and an impactful GDP, how do we get that done? Well, beyond the oil sector. The oil story is beginning to look good. But industrial manufacturing, construction is down.
It's policy. It comes down to policy. Because, first of all, what we need to acknowledge right now is that we have stability within the economic policy. Okay? We've resolved the issues of the foreign exchange rates. We believe that the inflation trajectory, because now we know what the oil, what the fuel price is now, that price has been transmitted through the system and should not result in any further increase. I think people are adjusting to fuel prices now between 850 to 1,050. I think we know the band now.
Yes.
Okay, so people have adjusted their minds to the fact that this thing can go as low as 850, 890, but as high as 1,050. So now that you have that level of stability within pricing, not only within the, which is what caused the shock in the system in the first place.
And the supply is also
resulted
getting
into
a bit more.
inflation. So we have the capacity, not only is the Dangote refinery coming on stream, but some of the NNPC refineries also are beginning to come on stream. So refining petroleum locally is no longer a problem for Nigeria. We've achieved a lot of success in cement, in petroleum refining, and these are the successes that we need to build upon.
What about capital structure, our assets,
yes,
the reserves? How do we put all of this together to fire our potential?
That's what I'm trying to say, that what we need first of all is, even before we go there, you understand what I'm trying to say, we've achieved this stability not only with rates, but also within the foreign exchange regime. It's no longer oscillating, and even though we're seeing some appreciation, that's also, but at the end of the day, there's a relative stability than what we had last year. So it helps for now planning. So it's now for time government to build on this. So the most important thing now is the trade policy. Our HS codes needs to be reviewed extensively. We need to understand how we're trading. We need to review our industrial policy, because manufacturing is only growing 4%. So what we've said is that you need to target certain areas. China is one of the biggest importers for Nigeria. we're importing close to between 18 to $20 billion worth of goods from China. So the question that our government needs to do is to start to sit down with China and say, look, you know, dumping, which is China is actually, you know, undermining our manufacturing industry because they're dumping goods here and selling goods cheaper than we can manufacture. So government needs to let the Chinese know that we are spending $18 billion a year to you. So those factories, those goods you are importing here, you need to come and set up your factories in Nigeria, manufacture them for the Nigerian market. Okay. You've seen what has happened in Ivory Coast now. The Chinese have set up a cocoa processing plant in Ivory Coast. So it's important that all those trade negotiations go on. That is how you look at your trade
ground.
Yes, so
around trade negotiations.
Trade negotiations,
trade diplomacy.
Exactly, it's very important. So with that trade, you tie that trade policy into your industrial policy, so that look, China, we're going to ban the importation of selling of these items within the next 2 years.
Are we going to raise tariffs?
If you do not do that, we don't need to raise tariffs. That's why I'm saying that we need to review our HS codes, which is our tariff structure, and you know, look at how things are working. So Chinese companies need to come in here to make investments, or other companies from any part, Chinese, Korean, Japanese, anywhere, Indonesian companies, and even Nigerians too, also need to get, the incentives need to be provided, deliberate. The example or the suggestion I gave, for instance, is we have 3 refineries in the ports, sugar refineries owned by Bua, Dangote, and flour mills. Yes. Most of these refineries import raw sugar cane and they produce sugar. Those refineries have capacity to export to the sub-region. This is a potential foreign exchange and an African Continental Free Trade Agreement project. Exactly. If we get Nigerian farmers to begin to grow sugarcane, we can increase employment for them, we can increase productivity in agriculture, and these companies should no longer import raw sugarcane. Their sugarcane should be grown here. If you go to Ethiopia, they have significant sugar estates there. So it's the same thing that we need to replicate here.
We used to have the Bashita region.
Yes,
the
Kogi, all the Tate and Lyles and everything, they set up.
The Kogi, Kwara, Niger State.
That is what I'm trying to tell you, that in the early 70s, our industrial policies was such that companies like Tate and Lyle had to set up their sugar plantations here in order to begin to supply the markets. But then we liberalized and we started importing. And it is the importation that has caused a lot of distortion. So the essence now is that we've achieved stability. So how do we build on this stability? It's no longer about monetary policy, it's now about real policies. And what is more important, like I always say, is that it is the entrepreneurs that will make these decisions. The question now is, where is Dangote putting his next 18 billion? Where is Samad, Rabiu, where is he putting his next $15 billion? Where is Tony Elumelu putting his next $5 billion? Where is Otedola putting his next money? How many more power plants are those guys building? And what incentives are you giving them? So these are the next, and all the other entrepreneurs we have, the new emerging tech companies too. Where are those people with good capital? You mentioned Nigerian breweries now with the loss. How many more factories are they building? How many more expansion is Nestle doing? These are the things that we need to do. The local industries, people who are here, what incentives are we giving them to expand their operations?
Do you think we can release some assets under privatization, a more rapid approach in privatization?
Well, in terms of the capital structure you've met, I think I'm quite clear that the government debt profile is no longer sustainable. So government now needs to optimize equity within its capital structure. And I think I've said repeatedly that they need to sell down assets, especially the JV assets, raise about $20 to $30 billion, use it to pay down the debt and let them improve the level of their reserves. And this will do Nigeria a lot of good. And by the time you see the oil and gas industry, oil production going to about 2 million barrels a day, then selling oil at $60 a barrel will help improve our FX position significantly.
Very interesting. Thank you so much. We appreciate those deep insights into Niger, state of the Nigerian economy. Thank you so much. Tilewa Adebajo, the CEO at CFG Advisory.